Community members, very happy to have you all here because we're going to discuss the U.S. non-farm payrolls in about 10 minutes. The numbers will be out, and me and my colleague Michael will cover it for you and hopefully with you. At the current moment, the forecast stands at 200,000 and the prior figure stood at 211,000. The median forecast for a 200K increase after the creation of 211,000 jobs in November, including the projected December gain in bearing. Big revision to prior months, employers would have added around 2.5 million jobs last year after 3.1 million in 2014. That would make the last 2 years the best for the labor market since 1998-99. Minutes of the Fed December meeting, when policymakers boosted their target rate for funds, showed participants acknowledged the improvement in labor market conditions. Many judged it as substantial. Members agreed that a range of recent labor market conditions, including ongoing job gains and declining unemployment, showed further improvement and confirmed that underutilization of labor resources had diminished appreciably since early this year. At the same time, Fed officials said there was room for slack to be absorbed and signaled further hikes in interest rates would occur gradually, just like Doug just mentioned. Meantime, the jobs report will probably show the differing industry responses to the plunge in oil prices and take overseas economies. Hiring was probably resilient at service providers, which include the restaurants, business services, and healthcare providers who are less exposed to such headwinds. For manufacturers and energy companies, the job market probably remained poor. Hello. As we move on, I would like to share with you the Bloomberg survey summary based on top 10 and many more economists surveyed on the matter on the U.S. non-farm payrolls, and according to their views, we have the summary as follows, where the median estimate stands at 200,000, average estimate stands at 3.15 thousand, high estimate stands at 250,000, and low estimate stands at 135,000 respectively. Number of estimates this time has reached 92. Okay, I have a couple of minutes. I would like to share with you the community member sentiment on the impact on U.S. dollar Japanese yen. As you can see, the members went rather bullish this time, 58.42% versus 41.58% respectively. And we have a couple of comments. For example, FX 211 pips says that last year the print missed 6 times and beat expectations 5 times. September price dropped 124 pips after 10 minutes, and at October 271 price goes up 82 pips 10 minutes past event. So basically, in December 2014, the forecast was 240, and the actual print 252,000, and the price went up 57 pips 10 minutes past event. Considering December 2014 and the fact that in the last 2 months the print beat expectations, he has a strong bullish stance on the U.S. non-farm payroll. Sharp says that he believes the 203,000 can get beaten, which will help the dollar for more rate increases this year. It's very volatile last 2 times it beat expectations, and ADP number was also very positive, which was a first indication. That pretty much sums up the fundamental part of this economic data release. And right now, I would love to pass the floor to Michael, who is going to cover the technical. Please.
Thank you, Paulina. Hello once again, everybody. So for the data release, we have the euro-dollar currency pair, same as on Wednesday when we had the NFP data, and nothing really changed much since then. We also have the positive suppressed trading strategy, expecting the data to beat expectations. Of course, the sell market. And the bearish sentiment still persists, as 56.09% of all positions are currently short, with the US dollar being bought in 47.5% of all cases, and the euro being sold in 56.95% of all cases. One thing did change actually, it's the pending orders. They both in the 50 and 100 pip range, they shifted from sell to buy. In 50 pip range it's 59.90%, and in the 100 pip range it's almost 55% also to buy the euro. However, other market participants are also bearish on the euro dollar, with Landa having 57.96% of traders holding short positions. Saxo Group has a 62.24% bearish sentiment, and daily FX previously was neutral, but now they also shifted to the bearish side, with 56% of all positions being short. So if we move to the market reaction table for the non-farm payrolls, we can see that the largest reaction was 158 pips in November, and the smallest one was only 71 pips, but nonetheless, the average reaction we could expect today is approximately 98 pips. So it's the second largest reaction will be after the November data. And based on this reaction, we can set the take profit and stop loss levels accordingly, which are currently located at the stop loss level at 1.0960. And we have somewhat the weekly R1 close by, which could bolster this resistance. And the stop loss, the take profit level is located at 1.764, which is quite close to the weekly S2, sorry, not S1. And we also have a bit lower this trend line, which was present also on Wednesday on the same chart, and it was actually confirmed with the data beating expectations. So if it manages to beat expectations today as well, we might see a decline even towards this area. So that is a level to consider. Well, so also keep in mind that we have also the unemployment data and the average hourly earnings, which could have some additional effect. Maybe we'll see mixed data and possibly no reaction or a really small reaction today, but we'll just have to wait for the actual figures to see what happens. So moving to the technical indicators, which are giving us mostly mixed signals. The hourly and the 4 hour ones can also be converted to the mixed ones, since they kind of diminish each other. And the weekly and the monthly ones are giving us the only ones that are giving us bearish signals at this point. So they are not giving us any clear sense of direction or suggesting that the pair will remain basically flat. And since I have like 40 seconds left, I'll just mention a couple of forecasts according to the Bloomberg survey of the top forecasters of the non-farm payrolls. One of them is Morgan Stanley. They expect the amount of jobs to rise up to 207,000 in December. Goldman Sachs expects a figure to be as high as 210,000. Barclays expects a 215 reading, and Bank of America Merrill Lynch to even 220,000. So basically all forecasts are higher than the Bloomberg forecast. So there's a good chance we might see the data beat expectations today. And yeah, we already see a reaction to the downside, meaning that it's probably better than anticipated. However, the take profit level was not reached. Oh yeah, we actually have a really strong figure. The non-farm payrolls is at 292,000, so by 90,000 more than expected, and the reaction is only 58 pips, but I reckon it will go even further down at this point. And the average hourly earnings and the unemployment rate fell in line with expectations and remained unchanged. So I guess that is all from my side, and back to you, Polina.
Wow, that's a number of it. Okay. Thank you very much, Michael. And yeah, once again, the numbers came out at 292K. Yes, and the previous was 211. Yes, thank you very much. And I guess it would be waste to pass the floor to Doc. Doc, what do you think?